In our last interview, we talked a bit about the Fed. Because I'm part of starting a new bank, I've sort of cultivated contacts at the lower levels of the Fed, whom I spend some time with. And by the way, they're uniformly high quality people, which surprises me from a big government organization, but we'll leave that aside. And I would say that the institutional bias within the Fed is not to cut interest rates. The Fed believes that they're the only responsible arm of the US government, that Congress and the president would spend us into oblivion. They're probably right. That notwithstanding, it would look as though the political pressures on them in an election year are overwhelming. So I suspect, despite the institutional bias of the Fed, that they may be forced to reduce the interest rate. I'm personally surprised by at least the statistical strength of the US economy. That's not to suggest that all Americans are benefiting equally. I know that many, many, many people are suffering. But the economy itself has held up much better than I thought it would, with a doubling of the nominal interest rates. Um, the suspicion that the Fed is going to have to pivot, like they did at the end of 1975, I think is responsible for a lot of the strength in the gold price. If they lower nominal interest rates, it signals that politics is more important to them than the deterioration of the US dollar. And if that happens, the value proposition around the US dollar, or the deteriorating value proposition around the US dollar and around US debt securities, I think will force a lot of people into gold. And I think the strength that you're seeing in precious metals markets has to do with that. By the way, if you hold gold in non-US dollar terms, you've been in a bull market for 5 or 6 years. The US dollar, as Doug Casey famously says, is absolutely the worst currency in the world, with the sole exception of every other currency. The fact that gold is doing well in US dollar terms, while the US dollar does well against everybody else, means that outside the US dollar, we've been in a bull market in precious metals for a while.
So it's interesting that you say that, and I would agree with you too, that this is the strength in gold and now silver really is really foreseeing a Fed rate cut, if you would. Would you also say that that is due to a lot of central bank buying?
Well, certainly the strength that we've seen in gold so far hasn't had very much to do with Western world retail. The strength that I mean, in fact, the ETFs, the data would show us that until 2.5 weeks ago, retail in the United States and most of the Western world were sellers, selling the bullion-oriented ETFs. And all of the strength on the buy side would appear to have been from foreign central banks or to a lesser degree, Chinese and Indian citizenry. It's important to note that the move that we've seen in gold thus far has more to do with the weaponization of the US dollar and the US dollar inadvertently, perhaps, forcing foreign governments to sell US Treasury securities and transact outside the US dollar and look for a medium of exchange that was simultaneously a store of value, which is to say gold. The very recent popularity in gold, I think, has to do with the view that institutional holders have that this central bank buying will likely now be joined by retail and family office buying in the West. If you overlay the traditional gold buyer on top of this new gold buyer, you set the stage for what could be a really surprisingly strong gold and then later silver bull market.